Good afternoon. Sounds good. Yeah, good afternoon, everybody. What's going on? Jim Spen, Profit Bear, Crypto Meister, good to see you guys. Hopefully everybody's doing well. Hey, we've got a lot to talk about today. Thank you guys. It's good to be back. Obviously, I haven't been very active for the past month. Many of you know why. Unfortunately, I had a loss in my family that impacted me quite a bit. But I am back. I'm not going to be dumping a deluge of content on you guys, but I do want to be consistent, at least checking in with you guys once a day. It's good for me. It's good for everybody else. So let's get this going. Good to see you, SEB. Crypto Meister, good to be back, my friend. Hopefully you guys are doing well. Sound off in the chat. I'm going to have to minimize this, I think, or I'm going to have to do this. Just give me a sec, guys. It's been a while since I've streamed. I don't even know how to do it. What do these buttons do? What are these? Oh my gosh, look at that. Look at that. Look at that. Look at that beautiful scene transition. My goodness, that is beautiful. All right. Yeah, we know how to do this. This is all good. Okay. Let's get this cracking. All right. We got a lot to talk about, guys. Let's just take it easy for right now. Let's keep it simple. Let's keep it nice and demure. Keep it nice and simple. Copy traders, anyone who's copy trading, we just did 2 TPs right now on Fairdesk and ByBit. I'll talk about that in just a sec. So yeah, we just smashed TP here on Bitcoin on both, for both Jumpex and ByBit, or excuse me, not ByBit, Fairdesk. So life's pretty good. Life's pretty good. I mean, we definitely could have held. The momentum's good, but we're just keeping it very simple right now. For example, I've got the community doing the Ethereum challenge right now on the 1-to-1 trades. So these are all the trades that we've taken this week with the community challenge, just trading Ethereum on the 1 hour time frame, simply using Minx default settings and the 60 Hall moving average baseline. So far, we didn't get any trades here because there weren't any primary signals, and that's okay. That's totally fine. But we've had 7 trades so far. 5 of them have been winners. 2 have been losers. That's approximately 71% hit rate. It's 71.43%, but we're going to say 71%. We're going to round, not even to the middle. I'm not even going to say 71.5 because that's disingenuous. Nobody cares about extra 0.5%. Like we don't need that. We don't need that 0.5% in there for statistics. We don't need that. So anyway, 71% hit rate. And that is a potential. Again, most people are doing this in demo with small capital account. But just to give you an idea of the kind of P&L that is, if you have a $100,000 account and you are risking 2% per trade, all right, with a 1-to-1 risk to reward ratio, meaning your take profit is the same distance away as your stop loss. That's so you're risking $2,000 per trade. You stand to gain $2,000 or you stand to lose $2,000. All right, 71% hit rate, 7 trades, 5 winners, 2 losers, $6,000. $6,000. That's 1 week. All right. Now, listen, I will be the first, just to touch on this real quick, because we have some different people that watch what we do. We have different individuals, obviously, from all over the world that not only watch what we do, but also are in our community. And so it's very difficult, nay, impossible, to create something like a one-size-fits-all solution for everybody. Let me go back here. To create like a one-size-fits-all solution, because if I say something like, okay, with a $100,000 account, 2% risk, as soon as I say 100,000, 50% of our viewers go, 100,000? Like, what do you mean? Like I'm never gonna have $100,000. Okay, so I get that. I understand. I started with nothing. And then the other half, they're like, only 100,000, dude? Like, come on, man. I'm not trying to 100x. So it's difficult to come up with that one-size-fits-all solution. But what I can say, listen, there's no way around this. Okay, yes, crypto is one of those very few places that you can come and flip a small amount into a very large amount, but that's going to take a lot of risk, and I don't want to be the one to burst the bubble, but the percentage of the people who do that is extremely small. It is extremely small. And most of those individuals who are successfully able to do that, they have a skill set that most people do not possess, and that is going to be coding, and really understanding on-chain analytics, because really the percentage of you depositing $5,000 onto something like ByBit, Jumpex, Fairdesk, and turning that into $100,000 is actually pretty small. I don't want to be like the negative Nancy here, but I'm just telling you from my experience, all the people that I've worked with, it's just very hard. What you can do, what anybody can do, is what you should be doing anyways, which is living within your means, making responsible financial decisions, and saving your money. Okay, if you can do that. Okay, if you can do that, pursuing your best life, constantly looking to increase your skill set, constantly looking to be more valuable at work. But if you can do like I did, this is the path that I did. I worked in a factory, okay? I ground out several years of my life, worked all the overtime, worked side jobs, sacrificed friends, family, fun things, just didn't do it. I just worked. I just saved money. And I had to do it 2 times because I saved up money, quit my job, went to trade, lost it all, had to go back to work, saved up money, came back, and that stuck. Although I made money, lost it, but I didn't lose enough that I had to go back to work. So I was able to build myself back up. So anyways, yeah, man, just buy meme coins, right? We're going to get there. All right, guys, so we got a lot to talk about. Let's kind of dive in. Before we get to the charts, let's talk about kind of the scuttlebutt. We're going to go over some headlines here, just talk about some news. This one coming from the Defiant, Bitcoin and Ethereum rally as Fed chair hints at imminent rate cuts. I talked about this at length in last week's mentoring session for our private community on Kajabi. And I showed a lot of charts, I showed a lot of graphs, and I really focused on recession data or data points that affect recessions that we feel are correlated with recessions going back quite a long time. About 60 years. And there are some key telltale signs that seem to always happen prior to recessions, okay? And they don't necessarily have anything to do with the stock market, all right? Everybody wants to correlate stock market behavior with recessions. And while it is true that some of the more recent significant recessions have been preceded by a booming stock market, it has not always been the case throughout history. I don't really want to hear I mean, of course, you could always make the argument, well, that's because trends change and things are different now and blah, 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 blah. But at the end of the day, you know, as someone who believes in statistics and math, I like larger data sets, and they let me know that, okay, things are cyclical. All right. So anywho, so if we lay out something like, and I'm not going to go into it ad nauseum here, but if we were to lay out like the 6 basic key things that happen prior to a recession that are telltale signs leading into a recession. We've done 4 of those 6 things. Okay. We've done 4 of those 6 things. The only thing that is really left to do, okay, the only thing that is left to do for us to hit the 5th, and the 6th thing is we enter a recession, right? The 6th thing is we enter a recession. So really, of the 5 things that need to happen before we go into a recession, and of course I'm speaking as an American in America, we've done 4 of those 5 things, all right? The only thing that hasn't happened, like for example, the yield curve inverted, it stayed inverted for a significant period of time. The only other thing that hasn't happened yet is non-farm payrolls, okay? Non-farm payrolls, for those of you who aren't aware, non-farm payrolls is the truest or best, closest we can get to to quantifying private job creation in the United States, all right? It is exactly what it says it is. It is the quantity of payrolls issued that are not classified as farm jobs, okay? Obviously, you go back to the 1920s, farming was like 70% of occupation, and now it's 2%. All right, so we exclude farm payrolls. Non-farm payrolls, I mean, we're still, like, I believe, obviously I reviewed the data, you know, obviously when they released it last month, but I think it was like hovering around 125,000, okay? And that's not bad. That's certainly, listen, that is certainly stagnant. That is definitely stagnant. That's nothing to be excited about. It's not good, okay? But recessions are characterized, without a doubt, recessions are characterized by non-farm payrolls printing less than 50,000, right, on a 3-month moving average basis, all right? So it's a little bit of a lagging indicator, but it just lets you know. Now, obviously, we have a lot of catalysts coming up, okay? We do have an election, right? And we're going to have, obviously, listen, I've talked to Dazim about how elections are really not as important as people make them out to be. You know, literally our entire government structure here in America is structured around like taking power away from the executive. That's what the founding fathers were obsessed with, was taking power away from the executive, not investing them with power. So, you know, presidents always come in. They certainly have like the last 100 years, and they're like, we're going to do this, and this. And they're just saying that stuff to get elected. And most of them are probably saying it with good intentions as well. Oh, you didn't see that. Most of them are saying it with good intentions as well. It's just that when they get in the office, they realize like how little power they actually have. They don't have this, you know, executive authority. And, you know, unfortunately, you know, nowadays presidents are expected to be experts on so many different things that they can't actually focus meaningfully, thoughtfully on any significant one policy change. So everything is just slapstick, slap hazard, quickly done. It's no way to run a government, man. So not super Anyways, man. Crypto Meister, man, thank you so much for the support, my friend. Thank you so much for joining the channel, man. I know, obviously, you've been a long-time member. I did reshuffle the membership things, but thank you so much for your support. You guys are the reason that I do this stuff. SEB says, how did I learn trading back then? Listen, honestly, pretty haphazardly, okay? Pretty haphazardly. Let's go to the charts while we're just kind of chatting here for a little bit, and then we'll go. Yeah, Bitcoin doing good, pulling back, or excuse me, that's Ethereum. What am I doing here? Yeah, I want to go to the daily on Bitcoin. I mean, obviously, Bitcoin, we've got the daily swing signal. We are breaking out. We've got the momentum signal. I am long on Bitcoin on the daily time frame in my primary account. We just took the hourly trade on both Bitcoin and Ethereum in the copy trade account. So we're just going to chill right now. We're going to see if we get any kind of sizable pullback. Probably, probably we do get a little bit of a pullback. And then I think the daily signal is a little bit more valid. How did I learn trading? I mean, the same way that most people learn trading, and it's for that reason that I started doing what I do, like the stream and the community and my courses and everything. I learned from different chat groups. Of course, this was back in the mid-aughts, right? So 2005, 2006, 2007. Chat rooms. Really, there wasn't any streaming back then. So I would just meet people in different chat rooms. I would meet people in different groups. I went to a couple of like local meetups, right, for stock trading. And then, I mean, that was basically it, right? Like I connected with people, learned from things. Back at that time, like there were a lot of different, and there, of course there are today, like way more, but nowadays it seems like most people gravitate towards the social media to learn, the YouTubes, the TikToks, the Discords, the Telegrams and all that. And, it wasn't as robust back then, right? So I mostly learned from word of mouth from people and trying just a lot of different things and reading a lot of different web pages. Back then it was just like you would randomly find a web page and you bookmarked it and you're like, okay, let me read everything on this web page. Yeah, books. I read a lot of books, and it was the books that really helped me out the most, right? I would say the first foray into trading was mostly like the word of mouth, like learning from people, things like that. And that worked okay. Like I learned the fundamentals, I learned the basics, but I suffered from the same problems that everyone is going to suffer from. Like I couldn't commit to a strategy. I kept switching strategies around. I did all the emotional trading mistakes like revenge trading, over leveraging, putting more money into a trade, thinking that I was bulletproof after a series of winners, just all of these common mistakes that I didn't really understand how to mitigate. And because I didn't know how to mitigate them, that's why I blew up my account the first time. Then I did read a lot of Ellers, I read a lot of John Ellers and Tom DeMark. All right. Tom DeMark was his I can't even remember the specific name of the book, but basically like the new market or the new way to trade or the new philosophy of trading or something like that. I have it on my bookshelf somewhere over there. But that was a fantastic book, and it was John Ellers' books and then John Ellers' writings later on. Once I subscribed to Stocks Magazine, that really showed me how to build a strategy. And then everything after that was pretty much like 3 to 5 years of just trying to figure it out on the go and trying different strategies, but being committed to strategy and not discretionary trading. That's the big thing. That's the big thing for me. Like that is the reason for my success. Obviously people watch the show. Obviously this is my life. I am very knowledgeable about the markets. I have done a lot of research. I do not know a lot of things. And the more you become an expert in something, the more you get a better sense of how things are going to go or should go. So yes, I have a pretty good track record of making good predictions, pretty good calls. Obviously I don't get everything right, but when it comes to what I put my money into consistently on my trading account, it's signals, man. It's just signals for my strategy. I try not to think too much, man. I try not to think too much about it. Yeah, Twitter's pretty terrible, man. Like Twitter can be great. Like you can learn a lot of things on Twitter, but the incentives, I don't know, man. Just, everybody has an incentive to be seen. And since everybody has a proclivity for, what's the word I'm looking for? Like instant gratification. Everybody has a proclivity for instant gratification. Everybody wants instant gratification. So they are naturally, so you naturally are going to click on the things that are, kind of eye-catching and, are saying things like, hey, this trader made like $90,000 in 90 minutes. Here's how, right? And then you click the thing and you read it and it's like, okay. That's why I say this, I cannot go through Twitter without seeing like a turn 5K into 100K, turn $5 into, $6,000. Like it's not likely going to happen, right? Not likely going to happen. Otherwise, everybody would do it. Just read the Bible and it said, buy the truth, sell it not. Man, I'm real happy that worked out for you, dude. And listen, I know, by the way, Prophet Bear, I was trying obviously to coordinate with the developer, and I am going to circle back around with him as soon as I can. That is on my list of things to do. So I do still want to do that interview. Yeah, that's it. Crypto Meister, thank you very much. Technical analysis of stock trends, or that sounds right. Is technical analysis it's the new philosophy of technical analysis. I'm pretty sure is what it was called. New philosophy of technical analysis. It's a fantastic book. Introduced me into the TD sequential and to a lot of TD's indicators, and that really introduced me to momentum trading, which is what I still do today. I'm a breakout momentum trader, and Ellers really taught me to like, oh, nerd out, do all the back testing. So those two combined were quite nice. Okay, sorry. Let's get back to the thing. All right. So as you guys know, as I was just talking about, we are really inching into a recession. Now there are a couple of things, obviously, like things can happen that pull us out of this. All right. Private job creation in the United States is very weak, but it is holding on. And as long as it can continue to hold on and we don't start seeing over the next year or two massive dips in private job creation, i.e. and literally all I'm talking about there, you're like, private job creation, well, how do we measure that? Non-farm payrolls. That is the metric that is put out every month, and that's how we track non-farm payrolls on a 3-month average, on a 3-month moving average basis. All right. So if you see that number go below 50, we're in trouble. Okay, we are in trouble because historically, there has never been an intervention that could pull price out of that, and we are seeing literally all of this. What we're going to talk about right now. Jerome Powell spoke at Jackson Hole today. He came out and he hinted that yes, we're going to cut rates. Right. So he was very dovish today, and markets are responding very positively, like they always do, like we naturally assumed. But this is the stuff that I was talking about with my community, and that intelligent people were talking about back when last month's non-farm payrolls came out. Okay, because back when non-farm payrolls came out, they were pretty dismal, and they were down just a little bit. They weren't down a lot, but they were down, and we wanted to see growth. We wanted to see private job creation, because everyone who knows that is the last metric that we're like hanging on to before we go into a recession. And we know that once private job creation goes down to those levels, there hasn't been any effective interventions that were able to work like immediately. It takes years. And the economy suffers as a result because things have to change. This is why we're seeing the Fed pivot from its more hawkish tone back in the previous FOMC, when they were like, well, we're going to rates. No, they're good. We like rates right over there. We don't need to do anything. Jerome Powell said. And now here you are just 1 month later, and a completely different tone, because they know that if they can't hold on to private job creation. And so what is the relationship here between interest rates and private job creation? Well, if you lower the interest rates, you make it easier for corporations to borrow money. Borrowing money means expansion, means hiring new people, means adding on. It means new construction work to build everything, literally everything, right? You make money credit easier for people to access, obtain, and use, then they will spend it. And in order to spend money, you have to have someone on the other side to perform a service for you or give you something. That's called a job. It's a job. So they're going to cut interest. They're going to start cutting interest rates. The prediction, not the prediction markets, but the predictions for how rapidly the Fed will cut are pretty high. It's like 50, 25, 50, right? Which means we're expecting that they'll cut 50 basis points at this first FOMC, 25 basis points at the next, and 50 at the next, which those two, that 50, 25, 50 in that progression is kind of an in-between between how they cut walking into the 2008 financial crisis and the 2001 recession. So, price controls, baby, expanding him too. So, I mean, listen, at the end of the day, that's really what it's all about, right? Like, if you guys, again, this is why I always kind of recommend, like, don't get caught up in the buzzwords or, the surface level stuff. All of this is very simple, right? It's basic fundamental, economics. Like, literally, the sad thing is, I think that almost every adult would benefit from just going. I think that high schools, literally, I am proposing this as, listen, Justin Wise 2024 official campaign. I would make it official policy, okay, that all, well, I would make a policy, but I would highly recommend that all adults who feel like they cannot understand the economy can just simply go to their local high school and for free, of course, because high school is free. Lunches are not going to be free, though. If you're an adult and you're coming to the high school to sit in on a class, you are paying for your own goddamn lunch. I don't care what I'm saying. All right. Adults should be able to go into high schools and sit in on classes for free. I understand why, you might not want to do that for college, but I think that things like economics and civics, okay? 99.9% of everyone I meet in real life and online needs a refresher course, okay? Because everybody watches the news and everybody talks about this stuff, especially during election years. Everybody talks about like election years and oh my God, like, it's like you guys do not understand civics like whatsoever, right? Like it's not really that big of a deal, like who gets elected. It's not, okay? Like who the president is like matters way less than who's in Congress. Who's in Congress matters the most, okay? Like they're the ones who actually pass legislation that affects our lives. The president has like very little power unless he has to press the green button. You know what I mean? Maybe it's orange. I don't know, whatever. Anyways, that color button. So anyways, civics and economics, but this is all basic economics, right? Private job creation and expansion and contraction of money supply. Like this is all just fundamental stuff that I feel like, listen, I don't remember my high school economics class. I learned all this stuff on my own. So I'm hoping that they're teaching our children this stuff. Because if they're not teaching the adults this stuff, if the adults don't know these things, how can they possibly supplement their children's education? You know? That's why I think it should be, like, it just seems like good policy. It doesn't cost anybody any money. And you would think that the majority, like, we would imagine that it wouldn't be that big of a burden on the school system. I mean, hell, it might even be good, because most parents just drop their kids off at school and they're like, yeah, okay, like whatever. Maybe, chip in and buy a sports booster, sweater, you know what I mean? Go sports team. But, if you're not like going someplace regularly, right, then you're not going to really want to care or contribute, and it's definitely our schools that need, supplementation, help, not money from the government per se, although maybe sometimes that could be helpful. But community support, right? Like our communities are falling apart, man. Like nobody talks to each other. Nobody cares. Nobody contributes. Nobody comes together, And I'm saying that as a Midwesterner, right? Where traditionally we do kind of do that stuff, right? So anyways, sorry, a lot. Boom. SEB says, we don't even learn anything about money and economy in the UK education system unless you pick economics as a qualifier. That is insane. Yeah. Yeah, I mean, give me control of the monetary system and I don't care who controls the armies, right? All right, so we're going to be having rate cuts. That seems like it's going to happen. Let's see. Let's just scroll through here. Blah, 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 blah. Yeah, blah, blah, blah. Markets were boosted by Powell's speech at the Fed's annual gathering in Jackson Hole, Wyoming. By the way, Jackson Hole. Beautiful trails. Beautiful trails. Where he said that interest rate reductions are on the horizon. Powell said, quote, the time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks, which is just all lawyers speak to say, like, yeah, sometime in the future. Powell did not specify the timing or magnitude of these potential cuts. I mean, we literally have like official prediction markets. And I'm not talking about Polymarket. I'm talking about like you can go to the Fed and you can see the predictions. Thank you, Verk. Thank you, Verk, so much, man. Thank you, SB. All right, let's see here. Yeah, on Wednesday, minutes from the Fed's July meeting revealed that most members favored a rate cut in September. And then, yeah, this is the other big thing too. Like everyone's like, are we going to pump? Are we going to not? I mean, the ETF inflows have been pretty nuts. We can actually, let's go look at those. Is this the right one? Give me a sec. Oh boy. It's a lot of bookmarks. Bitcoin ETF analysis. Thank you. Good Lord. Thank you. Didn't have to look so far for it. So this is so value. This is what I typically use. This one and then flip side is good. Flip side's a little bit simpler. Far side investors. This one's a little bit simpler. But here we can see the ETF inflows. But we're gonna go over here so that we can see. Let's see your total Bitcoin spot ETF net inflow. Let's see here. We'll just go to the weekly inflows. All right. Total net assets, weekly total inflows is going to be the green. So yeah, we've been getting good inflows. It's not bad. All right. This is since January. And we can see all of the inflows so far. They certainly are going down, but they remain robust. They remain robust, which is not bad. Okay. So yeah, we can pause. Let's flip here a little bit and let's actually just go look at the charts. All right. So I mean, short answer, SEB, yes. Oh, so I'm sorry, Verk, yes, I think so. So what I've got going here is pretty simple. This is a very simple daily strategy that we're currently using. And all we're using here is the GAN swing high-low V2. All right, this is a free indicator on TradingView. Any of you can use this. If you're curious about my settings, I have it set to 21. All right, it's the moving average period. And it's pretty simple. All right, and you can just go back test this. So let's just go we can just do a simple back test. All right. Okay, so here's a signal. Okay. Here we have a signal. Okay, and we can see that the return following the signal was 8.61%. Here we have a signal. We can see that the return following the signal was 9.32%. Let's see here. Here we have a signal. We can see that the return here was 2.71%, very minimal. I would call this one a loss, definitely. But then we go back and we start seeing like really robust signals, okay? 70%. 64.47. Even this one, 7%. Okay, 13%. This one had a negative return. 2.45%. So this strategy, okay, that I have on here, and there's more to it, okay, the way that I utilize it, because I utilize baseline crosses for safety, okay? But a very simple strategy with this as the bones is going to be giving you very potentially lucrative, strong swing signals. Obviously, you can see that Bitcoin has been trading sideways since March, okay? Okay. And so we haven't done much, all right? We haven't done much. But even in there, okay, we've had, let's call this a loss. Let's call this a win. Let's call this a win, all right? And let's call this one a loss. So 2 losses, 2 wins, not bad, okay? We have additional now on the surface, that's a 0% hit rate, right? It's a 0% hit rate or a 50% hit rate, you know what I'm saying? And you would think with a 1-to-1 risk to reward ratio, you're making absolutely nothing. Possibly true. We do have strategies that we recommend adding on to the base strategies, such as baseline crossings, or basically early exits, right? Not just basically, literally early exits. It's called our early exit strategy. So we have that, and there are exit signals, okay? So those can potentially even have turned these into profitable trades, all right? But we have beautiful short signals. 1, 2, 3, okay? So now it's 5 wins, 2 losses. Now we're making money. And the beauty of these swing signals is that you never know when you take the signal if it's going to be something like this or if it's going to be something like this. And that's why I only ever take 50% at TP1. My first take profit, I want to get half of my profit out and I want to leave the other half to ride because I never know. I don't know if it's going to run, but it might. And it is the small percentage of my trades that run like that at the end of the year are the majority of my profits. It's the 80-20 rule. 20% of my trades count for 80% of my profit. That's not a hard number from my brokerage statement or from my account balance. I am just approximating and generalizing, but I can't say that it is absolutely true. All right. I would say that, again, the majority of the trades that I have, the majority of the trades that I take are moderately profitable. Like it would be worth doing it. You know what I mean? Like I wouldn't have to have a job. It is when I get runners that I get excited and I can, you know, invest more or actually do something, you know, I can make a move. You know what I mean? So, and just have to be patient for that, right? Because like I'm saying, if you've been trading the strategy since just March, well, you haven't really had any big wins. I mean, you've had some nice wins, but you haven't had any huge runners, you know? But if you've been trading the strategy since December of 2022, I mean, good Lord, you're ready to retire. Not really, but you get my point. So it's just all patience, guys, and it's time in the market versus timing the market. You said we only have one more factor left till the United States is in a recession. Wouldn't that make the market more volatile? Again, as I said, the data points, what I said earlier was, although the two prior important recessions, the 2008 financial crisis and the 2001 recession, while both of those were preceded by a booming economy or a booming stock market, the stock market is not the economy. Meaning, and that's even double-sided, because listen, if the stock market is booming, it doesn't mean that the economy is good for everyone. Okay? In fact, it can often mean that conditions on the ground are worsening for middle and lower class Americans. Okay? So a booming stock market does not translate to a booming economy. However, the inverse, though, is unfortunately true. If the stock market is falling, then everyone is losing money. Everyone's missing out. Because, yes, it seems to be undeniably true that a booming stock market does not directly, sometimes indirectly, you might argue, you know, as a capitalist and somebody who would be pro-capitalism, we would argue that, yes, while the argument that people on the left may make that, you know, like a booming stock market, the rich get richer, blah, 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 like that doesn't help the people on the bottom. You could argue on the right that they benefit indirectly because, you know, in a booming society, we can just see this like from direct evidence, like first world countries, you know what I mean? Blah, blah, blah. So yeah, I guess the point that I'm trying to make is that a booming economy does not translate to a booming stock market does not translate to a booming economy. Unfortunately, though, a crashing stock market does translate to everybody's crappy. Everybody's getting a bad hand because if the stock market is crashing, companies are losing money. They are taking measures to offset risk, which always means layoffs, shrinking, not expanding, not hiring, not taking on new jobs. So that hurts the poorest, the middle and lower class Americans very, very bad. So booming economy does not mean booming stock market does not mean booming economy. Crashing stock market does mean crappy America. That's what crappy economy, period. That's all it means. With regards to, but there's not these very clear cut, like all-time correlations of the market. Like, wouldn't the market be more volatile? I mean, I would argue that the stock market's been insanely volatile. You know what I mean? And like in a couple different directions lately. And this is still pretty volatile. I mean, it just depends on what your measurement is. Like, you know, Bitcoin, even though it's mostly been going sideways, it's going sideways to the tune of like 25% up and down. Like to a stock trader, that's nuts. You know what I mean? So yeah, I don't know. Yeah, I don't have the best answer to that. G.I. Joe with Kung Fu Grip Time. What I would speculate is that, let me think about that. I mean, I don't know. No, I don't necessarily think so. Because, you know, like all people, right? Like you have to think everybody's motivated by greed and profit for the most part. So the individuals that would need to react and respond to put on trades, wind down leverage, close out positions, all of these kind of things that would cause the stock market to fall are the same individuals that are going to wait till the very last second to do that. Like I said, you know, non-farm payrolls is dismal at 125, but it's not in recession territory. Below 50,000, it would be recession territory. All the key players are watching that data metric, okay? And once that data metric like shows that, okay, like recession's pretty much here, they will likely then start to act to hedge risk, okay? But until then, I mean, I want to hold on as long as possible because anything could happen, right? Like non-farm payrolls could go bloop, 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 and we could be saved from a recession. It's possibly true. Some would argue that we've been in a recession, you know, but again, mathematically correctly, like, no, we have not been in a recession. Recession is characterized by yield curve inversion, which has happened. And then it's characterized by non-farm payrolls going below 50,000. That is that's the mathematical definition of a recession. At least in the United States. You can also make like the more strict economic classification of a recession, which is a contraction in the monetary supply. Okay, so sorry, that was a lot. Let's do some charts. So BTC, we are breaking above the baseline here. If we look to the confirmer, DPMO by Lazy Bear, this is also a free public indicator. Time transformation is the only indicator here that's proprietary. It's our proprietary indicator. But this is all good. This is very healthy. Bitcoin has, of course, dropped down. I think we put in a very strong low at 49. Okay. This certainly does not feel like just a rebound. Now, for this trade, my stop loss is about, so I entered just, you know, a little while before stream this morning. And I'm recommending entry between 60 and 62,000. So we're a little past that now. Okay. We're a little past that now. You can either wait for a pullback or you can just take excessive risk, kind of entering on more of a pump. It's up to you. I can't trade your account for you. But I am setting my stop loss quite low. All right. My stop loss is about 15% away. And there's a specific reason for that. All right. One, I really think that I feel pretty strongly that the low is in. Okay. And two, if we are going to break out and really benefit from these rising cuts, I mean, then this trade that we are currently in has strong potential to be a runner. However, we very commonly see failed breakouts. Okay. I mean, yeah, we just saw some over here, right? When Bitcoin was coming off of the highs. So even though I do think we've put in a pretty sizable low, I want to leave myself open to any range shenanigans. All right. Any range shenanigans. So 65, I think 65 is pretty easy now at this point. You know, clearing or hitting 65 should be relatively easy. So that would be my first thought, discretionarily, as far as what I think we probably see play out. I think we probably see a pretty safe and easy ride to 65. And either we continue to push, which would be very, very strong. Or at that point, we'd probably see a little bit of a pullback, consolidation, and then either continuation upwards or pull back into the previous range. Either is possible. But we do seem to have, again, we really have kind of held on to this low, even at 56. You know what I mean? Like, look at this quick deviation below it. Like, it got bought right back up. So I would expect that if price was going to continue on down, it would have done so after the strong reactionary candle. But this reactionary candle is, I mean, strong. One of the strongest bullish engulfing candles off the bottom we've seen in a long time. So that's BTC. I think BTCs can hit 65 easy. And if we correlate that to Ethereum, then I think Ethereum should have no problem. Yeah, I mean, ETH at 27.25, giving the same daily signal that made Bitcoin pop, I'd say we're pretty good. Again, I guess there's two ways to play this. Of course, it just depends on what kind of strategy you want to run. You know, obviously tight stop is fine. That way, you know, you don't, you know, if the trade pulls back here, you get invalidated. But with these types of situations, you know, I've seen price, you know, like continue to want to range for a little bit. So it's just however you want to play it, however you want to manage your risk. But I do certainly think that things are good for the short term, for the upside for a while. Everything looks really good. I mean, just on the surface. So, you know, obviously you can get down on the lower time frames and really stress out about it. But daily is signaling long for both Ethereum and Bitcoin. Let's do a quick alt scan. I don't understand. Oh, here we go. All right, that's the right list. Yeah, BNB signaled long 4 days ago. So BNB is pretty good. Pretty overbought though. So on BNB, I'd likely be looking to take profits and reposition into something that wasn't as overextended. Man, nailed that. Loved it. You love to see it. Solana is not signaling long yet, lagging behind a little bit. XRP, my favorite stable coin, doing fantastic. I bought XRP 5 years ago, and it's still at 60 cents. You love to see it. You love to see it, ladies and gentlemen. Dogecoin moving up nicely, giving that long signal too on the daily. The swing long on Doge, confirmed by both DPMO and time transformation. That's looking pretty good. TON looking pretty good. I actually, TON, I shorted both times down back into my target range. But we are holding above the baseline now. We got some divergence here from time transformation, though, so I would probably pause until we get a stronger breakout signal on TON. Cardano's looking really good. I know there's some good fundamentals around Cardano right now. Shiba Inu, popping, good. Avalanche, popping, signaled long 3 days ago. Tron, guys, yeah, huge win on Tron. I called this one for our community. We're still in, no, excuse me. I think we closed out TRX. We did close out TRX. I'm sorry. But you know, listen, even if you got our first target, we pulled back, we've now hit our second target. Life's good. Life's good. Life's good. Life's good. Yeah. So call TRX for the community. It's a pretty good trade. Link signaled long 3 days ago. Polkadot is signaling long today. Uniswap signaled long 2 days ago. But this is the type of trade that I typically wouldn't take. I call it overextended. Near signaling long. Matic signaled long 3 days ago. Litecoin signaled long, but on overbought conditions and then pulled back to the baseline. This is where I'd enter Litecoin, but honestly, we haven't been trading Litecoin too much. Pepe Le Frog is printing long. Insane Clown Posse, internet computer, is printing long. Fetch AI printed long 3 days ago. Caspa not printing long yet. Lagging behind Ethereum Classic is... That should be a long signal. That's weird. Aptos printed long 3 days ago. I guess RNDR is no longer there. Blockstacks, one of my favorite coins, printed long 3 days ago. Long-term holder of Blockstack. Never selling my Blockstack. I mean, not never, but you know what I'm saying? Not never, but... HBAR printing long. Filecoin printed long. Injective printing long. Cosmos. Stellar Lumens. Immutable X. Arbitrum. Kronos. Dog with hat. Tau. Yeah, it's pretty much, guys, just pretty much everything is printing long right now. You know? So as with most things in crypto, you know, like you don't have to be a genius. Like when the getting's good, go get, you know? Like, you know? Just keep your trades within risk, okay? Don't take more than 5 trades. And if you haven't been making consistent money for over a year, limit your risk per trade to 2%. Okay? Just do that for a year. If you can make money for a year trading at 2% risk, then you can do whatever you want. Okay? And you'll make money. Hold on. Let me pull that back. That clip's going to come back to haunt me in a couple of years. I'm not guaranteeing that you will make money. But what I will say is that if you can discipline yourself to do 2 things. To only trade, to only open up a position when a strategy that you're using gives you a signal. Okay? I guess 3 things. 1, consistently use a strategy for a year, the same strategy. 2, only trade when there's a signal. 3, limit your risk to 2% per trade. If you can do, I mean, hell, if you can do that for 3 months, you'll be much better prepared than just about 80% of the market to make money trading. You can do that for a year and you're consistently making money throughout that year, meaning your account balance was this when you started, and at the end of the year, it's like somewhere above where you started, okay? I would say you're a trader. I would say you're a trader. And I would say probably at the end of that year, you're going to have all the skills and experience that you need to do whatever you want, to trade however you want. Because again, just like I was talking about with like visiting schools and being involved in the community and all that stuff, like you're not going to want to do that stuff if you're not actually going somewhere, if you actually care. And to actually care, you need to be involved with something or see it frequently, right? It's the same with trading. Like if you want to actually get good at trading, you just got to trade, you know, and you're not going to be good at first. It's not hard, but it is hard. All right. The act of trading is very simple and it's actually pretty boring, right? Like I just get alerts now. All right. And I go to the computer, I look at the signal, I check my rule book, I look at my open risk, and then I either take the trade or I don't. That's it. It's pretty boring. Okay. But it's great. It makes money. I love it. And what's hard though is everything in between, everything that goes on in your mind, everything that you're watching all these traders on social media, you know, talk about making millions. You're not making millions. You don't think you'll ever make millions. And that makes you think like you need to do more or switch this strategy, or, oh, I could have made more money on that. So hold on, let me change my baseline and I'm going to do this, or let me buy this new fancy indicator that this dude, you know, is pimping on TikTok. You don't need to do any of that stuff. You don't need to do any of that stuff. TradingView has everything you need, and you don't even need a subscription. Okay. Although I would recommend that you get the 5 indicators and all that stuff, right? And all the features, blah, blah, blah. Anyways, but you don't need to spend $1 to learn how to trade. You don't. Nobody does. All the information is out there for free. Okay. It's all out there for free. Now, having said that, right? You're like, well, Justin, don't you run like a private community and sell stuff? Like, yes, I do, because yes, we can certainly accelerate the process, right? We've done all the work for you, but you don't need to. Okay. Just telling you that. You have everything within you to be a good trader, to be a great trader. You really do. Okay. You may not have it all in the quantities that you need at this moment, but you have all of the potential inside of you. Because anybody can get more disciplined. Anybody can get more smart. Anybody can get more experienced. Anybody can get more passionate. Okay? If you can just commit to doing the work and following the rules, if you're meant to be successful, you'll be successful. That's what I will say with quite a lot of confidence. All right, let's look at a few things here. Go away. Thank you. Okay. All right, let's see what we got going on here. Let's get the liquid. Oh, sorry. Let's get the footprint off. And I do want to look at large orders. All right. Oh, sorry. You guys can't see what I'm looking at. Okay. Sorry. Let's look at large orders. Now, all right. So we chewed through a bunch of liquidations, guys. We chewed through a bunch of liquidations. We filled a shit ton of orders. And we broke through, guys. I mean, we broke through, you know. Orders start getting dense. All right, so these are, by the way, if you guys don't understand, this is CoinAnk. And what we're looking at right now, the purple bars are legitimate limit orders to sell, okay? These are not spoofing, you know, like coming on, like these are legitimate brokerage orders to sell, okay? And they start coming in pretty thick at 65,000. Okay. As you can see, we do have some limit orders to sell. And by the way, the way this works typically, all right, is they often act as resistance. Why? Because price is going to continue moving up because price wants to find liquidity. There are willing buyers right now. The market wants to find the buyers. The market wants to match the buyers to the sellers, okay? But if people are very eager to continue buying at higher prices, the sellers will continue to move their liquidity higher because who doesn't want to get the best deal? Who doesn't make the most money for what they're selling, right? If you walk into the pawn shop with, you know, your 10-year-old copy of Gears of War 2, I don't know if Gears of War 2 came out 10 years ago, and they're offering you $5, and across the street they're offering you $10, of course you're going to walk across the street and get an extra $5. Okay, so same. If you know the buyers are willing to continue to buy higher, you're going to continue moving your limit orders up. But here we can see where they're really parking. They start at 63.5. We've got another little bit at 64,000, and then it comes in thick at 65,000. Once those limit orders are sold, price can continue moving a little bit, but then it often will run out of steam because there's no more really willing sellers there anymore. Price will come down. Doesn't happen all the time. There are, especially if we have high volatility, price can shoot through these, but more often than not, they act as reliable places where price can stop. All right. So we're coming up on one right now. All right. It could be that this potential trade is over for now. All right. And then we do experience a pullback. If we got a pullback, I mean, we probably wipe liquidity. I mean, we would probably fill this gap, right? We'd probably wipe liquidity. We'd probably pull back to 61.9, 62. That makes a lot of sense. Maybe even a little bit lower, like the mid 61s, grab this liquidity and then probably make a charge. But certainly I would say, you know, this is why I'm out, right? On the daily I'm in, but on my shorter term trades that I take for the copy trade accounts, you know, again, like I will be the first to tell you that it is very hard, nigh impossible to be 100% accurate trader, but I try to be 100% accurate on the copy trade accounts because this is other people's money. And honestly, if I'm not a profitable copy trader, then you don't make money. And if you don't make money copy trading me, you stop copy trading me. And copy trading is profitable for me. So I try to do my best. So I do trade differently in my copy trading account than I would in my regular trading account. Meaning I take less risk and I have very short profit targets. And I don't trade that often. But yeah, so for the short term, I would probably be out on like the hourly swing. Or at least I'd be booking 50% now, moving my stop loss to break even. And I would probably be setting a next target slightly below 64,000. But I would expect to see either a pullback here or we continue charging quite highly. How many monitors do I have? I used to have a lot more. So I have 2 different desk setups in my office here. This is like my streaming recording section of the room. And I only have 2 monitors here. All right. And I found that over time, I used to have like 7, I had 9 at one point and all this kind of stuff. And honestly, as someone with ADHD, even though I can like look at a lot of data all over the place, I found that it was like, I don't know, it just was not making me more productive. It was not making me more productive. So I just simply have 2 monitors here. I have my lower monitor where I can monitor my stream and other things. You know, sometimes I have a script here, you know what I mean? Or notes, you know what I mean? If I'm giving a presentation. And then the top screen is just like what you guys see, you know what I mean? Charts and stuff. And I see all my tabs at the bottom. Nothing too complicated. And then over at my work desk, I just have an ultra wide 55-inch monitor. And obviously the way an ultra wide works is I use Fancy Zones, which is a Windows Power Tool module, to split it into 3 different screens. So it's like I have 3 screens over there. So theoretically I have 5 currently. Which, you know, and listen, I've done the whole like day trading setup where I've had like 9 monitors. You don't need all that, man. It's not necessary, right? Like, what do you, like, I don't know. Most of those traders don't make money in my opinion. Anyways, moving on. Sorry. Looking at the liquidation heat map real quick. Yeah, we can get some correlation here. Let's just refresh, make sure this is up to date. Yeah, so yeah, price has been on a good liquidation hunt, right? So, and typically the way it works is as long as liquidations continue to appear, we can kind of expect the price will continue to climb. All right. And once they start to kind of peter out, it means that, you know, open interest is waning. So people aren't going to position so much. So we do have a pretty thick wall of resistance, I would say. Okay. You can see the liquidations are kind of cropping up here, but they're starting to thin out. Whereas over here, you could see that they just, you know, like people were continuing to short. But it looks like people are starting to not short now. We're coming up and we're testing like the highest levels of liquidity for short traders right now. So, like I said, I would be probably booking short-term profits at this point in time if you guys are trading on like the lower time frames. And I would set yourself up in such a way that you can profit from a sweep up to these levels, but then look to book out. On the daily though, I would hold daily BTC. I would hold daily BTC. I would hold daily ETH. And if you want to diversify into some alts, that's totally fine. But don't only pick like 3. Again, don't take more than 5 trades at a time, or you can't manage it. It's just too much to manage. And then, yeah, I mean, that's pretty much it, guys. I just wanted to come on. I wanted to discuss what's going on with me, with the current markets, share some charts, share some laughs. And thank you guys so much for showing up. I really appreciate it. You guys have made this very fun. It's fun to talk to people. As a trader, I will be the first to tell you that it can be somewhat of a lonely occupation. All right. I spend a lot of time. Just traders tend to be kind of like, I don't know, like me, I guess. Although I'm kind of different. But traders tend to be a little bit, I don't know, isolationist, I guess. Yeah, that's the word I'm looking for. You know what I mean? You know, we like to do our own things, you know, cure our own deer jerky, that kind of stuff. You know what I mean? Tinfoil hat, all that kind of stuff. So thank you guys. Yeah, I appreciate it. I appreciate you guys showing up. Let's go over a few things just real quick before I bounce out. I am moving to a new copy trading platform. I hinted at it. I will be making a full length video explaining why, but it's really not super complicated. I have been copy trading with Fairdesk for about a year, and very simply put, all of the talent, engineering, marketing, everything from Fairdesk has divested and moved to a new platform called Jumpex. And the only individuals that are in charge that are left at Fairdesk now are not the people who grew Fairdesk. From when I started working with Fairdesk a year ago, nobody knew them exchange. But I began working with them because of their team and everything I saw them. I saw them honoring commitment after handling good customer service, after providing liquidity. They just did all the things that ByBit used to do back in the day. And that's why I started working with ByBit so long ago. So I've been working with Fairdesk for over a year, and they went from being a know-nothing exchange to a top 10 exchange within a year. Talent. All of the people that did that have moved over to Jumpex. Okay. And the people that are left at Fairdesk, yeah. So I'm going to be winding down my copy trade account on Fairdesk over the next month and inviting everyone to join me over on Jumpex. The link is already down in the description if you want to go over and transition over. I will be doing the same thing, copy trading. Through signing up for my link, the deal is much better on Jumpex too. Previously, people who signed up with my link on Fairdesk got VIP level 1 fee reduction, which was pretty hefty. But over on Jumpex, they'll get VIP level 3 fee reduction. Also, there are going to be one of the most common critiques of Fairdesk was like, oh, they don't have all these many pairs and all this kind of stuff. Right. Because, well, I don't want to go too deep into it, but the people who are left at Fairdesk are the people who didn't want that. They didn't want to grow. They didn't want to expand. But the people over at Jumpex, again, the talent, they do. They want to grow. They want to expand. So they're going to be adding a ton of pairs. Pretty soon, you'll be able to access up to 1,000x leverage on certain pairs, which is crazy. I don't recommend it, but it's there. You know, if you're trying to, you know what I'm saying? I don't even know how to pronounce that. Smilall? I know who you are. I just don't think I've ever said your name before. Man, good to see you, man. Good to see you, my friend. Rick G, too. What's up, man? This is the baseline here. This is the Ganswing High-Low V2. All right. It's by Chris Moody. It's a free indicator on TradingView, and I use a moving average period of 21. And I mean, let me tell you, brother, just back test it. It's killer. It's killer. It is beautiful. It's beautiful. I was just winding out. Yeah, the referral code for Jumpex is down in the description, my friend. You guys can click the link and you guys will be all good to go. So yeah, go check it out. Same thing. It's KYC free, VPN free. All right. So, I mean, obviously with all of the major exchanges cracking down on KYC VPN, I told you guys when we started doing the Fairdesk thing that I was like, okay, I think we're going to be good for a year here. KYC VPN free. Same thing over on Jumpex. I would speculate that at least 2 years. Probably get a good 2 years because it's probably going to take a year to go from Jumpex being pretty small to a top 10 exchange. And then it'll probably take another year or two for them to get noticed. But lots of profits going to be made in 2-3 years. So anyways, all right. You guys have been awesome. Thank you guys so much. I'm sorry for the guys who are just coming in. I'm winding down right now. I want to be careful making promises that I can't keep because I do still have a lot of things going on in my life, but this is very important to me. I really do enjoy the streaming, and it is probably good for me to commit to doing it at least once a day. So I have made that commitment with my team though, that I am going to stream. I'm excluding the weekends, guys. I have a life, that I will be streaming or at least making a piece of content once per day. All right. That'll get me back into the swing of things. And I would expect that if you guys give me a month, I'll be back into the full of it. All right. Because I started the technical analysis for crypto trader series. Go check that out after this stream ends. You're gonna like it. The first 2 videos on that are out, and I do have the 3rd video pretty much ready to go. I just got to edit it. So I want to continue with that series and then getting back into the things. So that's all I've got, guys. Thank you so much for spending your Friday afternoon with me, guys. Enjoy your weekend. Trade safely. Again, the markets are looking pretty good, looking pretty healthy. Don't get too crazy with it, but things overall, the macro is looking good, and the technicals are looking pretty good, at least for the next couple of weeks. So I think pretty smooth sailing. Of course, pullbacks, volatility, all that kind of stuff. But overall, I think that if you can commit to lower risk, long swing trades and find some good entries, I think you'll be all right. We will be back on Monday. I will be back on Monday. So I hope to see you guys then. Links in the description for everything you could possibly need. You can come master cryptocurrency trading with us at krakencryptocurrency.com. And like I said, check out that technical analysis for crypto traders playlist after this. You guys are going to enjoy it. All right, guys, trade safely, and I'll see you on the next one. I don't have an end button. I've got to do it manually. Oh, hold on a second. I know.